This one simple strategy has helped professional traders catch the biggest move in the market, and today you are going to learn exactly how it works. Today I'm going to show you one of the most powerful market structure strategies, the long-term market structure by Larry Williams. Last time we talked about the intermediate term strategy, but this week we are diving into the long term where the real moves happened. In this video you will learn what long-term swings are, 2. How to spot long-term swings on a live chart. 3. A simple yet effective Larry Williams long-term strategy you can start using right away.
So, however, this trading strategy, the long-term strategy, can be used on all markets. So we can be able to use this long-term strategy, which is the Larry Williams approach, on all markets. So it you can use it in the crypto, you can use it in the forex, you can use it in the indices, the commodity, the so many other markets. So that is just it. If you really enjoyed this video, please like this video because this video is going to be long. So I want you to stay with me from the beginning to the end to understand how we can be able to trade the long-term market structure from Larry Williams approach. First of all, let's talk about what is long-term swings. When we talk about long-term swings, you have to understand that we are looking for a duration of price that is going to tell us how far the market is going to likely to continue going up or going downward. So in the Larry Williams approach, when we spot our long-term swings, we have to understand that there's going to be the intermittent swings on the left and there's going to be intermittent swings on the right. We talked about this step last week when we talk about our intermittent swings. We have to have two short-term swings left and right, which gives us our intermittent swings. But in this long-term swings, there's going to be two intermittent swings on the left and the right to give us our long-term swings. So it's very simple. That is how we got our long-term swings. And these long-term swings are one of the most profitable long-term swings you can look for when looking for a buying trade or looking for any setup in the market, like either bearish or buying scenario. So same things also applies to the swing high. When we look for the intermittent swings high, we have to understand that there's going to be intermittent swings highs on both sides. It gives us our LT, which is the long-term swings, using the Larry Williams concept. We know that we talked about this concept last week when we talked about the intermittent swings high. We have to have two short-term swings on the left and the right, short-term swings high on the left and the right to give us our intermittent swings. So in this approach, we have to have our two intermittent swings on the left and the right to give us our long-term swings high. So that is it. Now, so spotting these swings are very key when looking for any profitable trade you are entering. And most of the time, most traders fail to spot what the long-term swings is all about and how they can be able to anticipate the market in a direction that leads to a profitable trade or leads to bullish market scenario or bearish market scenario. So it's very essential we understand what these long-term swings are by using the Larry Williams concept, using the intermittent swings between the left and the right, either our swings highs and swing lows. So it's very essential we understand this long-term swing very well. So as a profitable trader, most profitable trader, not most, all profitable traders have a way to understand what the long-term swings is all about and how they can use it to their own advantage. However, most people struggle to understand these long-term swings on their live charts. That is what we are going to do now. So let's dive into our live chart and let me show you how we can be able to spot these long-term swings from the beginning to the end by using our long-term swings approach, which is the IT, the intermittent swings left and right to get our swing low, and we also use our intermittent swings on the left and right to get our swing high on the long term. So let's dive into our live chart example. Okay, now this is our live chart example on the GBP USD. So I remember the time I was learning how to trade. I was going for trading tutorials online, watching from one video to another, and sometimes I don't really know what the market is saying and how the market are likely to react to various trends. So I watched a lot of video, watched the ICT, so many other factors. So I could not be able to understand what the difference between long-term swings, intermittent swings, and the short-term swings. So that is the reason why I venture into who is the owner of the long-term swings, and who was the first idea that these long-term swings. I go into a research and check who was the first person to understand the long-term swings. However, I found Larry Williams. So Larry Williams was the person that was the guy who wrote the short-term swings, and ever since then, I fell in love with Larry Williams' teachings. Understand that most of his teaching was being derived by ICT. ICT couldn't have used the short-term swings to trade without the Larry Williams teachings. So I noticed that there's something fishing here. So I decided to take more aggressive into research, and I can be able to spot my short-term swings, the intermittent swings, and the long-term swings. So this approach works. So when we talk about the long-term swings, we have to understand that the long-term swings are very hard to spot. That is just the truth. The long-term swings are very hard to spot. I'll try to spot the long-term swings. When I was a beginner, I failed. So that is the reason why I go into the teaching of how I can be able to become a profitable trader using the short-term swings and the intermittent swings and the long-term swings. Now, these guys, let me give you an explanation. Let me give you a detail. Without you understanding how to spot the long-term swings, it will be very hard for you to become a profitable trader in the market. So it's very difficult for you to be able to become a profitable trader. So let me continue the video and let me show you how it goes. So when we talk about long-term swings, we have to understand, according to Larry's approach, because this is where I got how to spot my long-term swings. We have to understand that we have to have two intermittent swings left and right. The intermittent swings must show us that there is an evidence, there's a peak which price has traveled. If you notice what I'm saying, know that this is a peak whereby price travel and tried fail to continue. What happened? It break lower. So each and every market structure over here is called inner intermittent swings. Inner intermittent swings. But these are just like a ranging market moving. But if we are classifying our intermittent swings, we have to classify that this is our intermittent swings left, and this is our intermittent swings right. So do you see the approach, the scenario? So let me show you. So how do we know if truly this is our long-term swings? I told you that we have the intermittent swings on the left, we have the intermittent swings on the right. So this gives us our swing structure in the market. Without we understanding this approach, it will be very difficult. So remember when price tried to take out these our intermittent swings highs, which is the middle one. Remember, this middle one is our intermittent swings. But if price fail to take out these intermittent swings highs here, it means our price, after price take out these this structure, it means our price is this structure is not a long-term swings. So it's a long-term swings. Pay attention. So this is how we got our long-term swing structure. So after that, look at what price did. Price just go. So after that, look at what price did. Price go bearish. But when it go bearish, what do you think happened? It created another long-term swings, which is long-term swing low. Remember, this is our long-term swing high. Now this is our long-term swing low. Pay close attention. So how do we know if this is our long-term swing low? Remember, I told you that there's going to be intermittent swings left and there's going to be intermittent swings right. So when price take out this know that this is an evidence that these 2 points gives us we react to the market. From henceforth, this is going to be our long-term swing low, while this is our long-term swing high. So look at how market goes. Do you see what market did? Market was creating a bullish move from henceforth. So this is our 4-hour chart. Remember, you can see it on our trading view. So remember what happened. There was a market structure to the upside. This market structure, this our long-term market structure swing was the one that created this move to the upside. Remember, in every trade, in last week I talked about we have the continuation intermittent swings and the reversal intermittent swings. So we have to understand that we have long-term market structure shift and long-term continuation structure, which is the pattern. So from henceforth, what do you see happen? However, look at what happened. Price was creating our structure. Our structure. Remember, this structure is our intermittent swings. So this is our intermittent swings. It's very simple. So that is just it. So these are our intermittent swings. So remember, we could not have our intermittent swings left and right. No, it's our intermittent swings. So what happened? This is our long-term. Look at what I'm saying. This is our long-term structure. What happened? What happened? Price take out our long-term swing. Look guys, when price take out our long-term swing low, which is this, what do you think happened at this instant? Remember, price pulled back into our long-term swing low. However, we should have expected that price create a continuation structure after our market structure shift. After our market structure shift bullish, should have create a continuation structure to the upside. But what happened? It fails to create our continuation structure. What happened? We don't have any other choice but to obey our pattern. So you notice that we have our intermittent swings left and right. We can call these intermittent swings, we can call these short-term swings. But however, I'm going to call these long-term swings. This is because when price hits our long-term swings, know that these swings is our long-term swings. But when price hits our long-term swings low, this become our long-term swing structure. When price take out these our long-term swings, remember, this now becomes our long-term swings. Do you understand what I'm saying? So just like price tried to take out price tried to continue our structure, but it could not. What happened? Price take out our long-term swings. Remember, this will now become our long-term swings highs. So this is what I'm trying to say. Now, we keep on looking. Look at this scenario. The intermittent swings are structure, left and right. So we have a continuation structure, shift. So do you see how it plays out? So it's very simple and straight to the point. Price just take out our long-term swings, our long-term swing highs. So this is what I'm trying to say. However, most people did not know that our long-term swing lows has already formed during this scenario. When price take out these swings over here, they fail to understand that the long-term swing low has already been established. So that is the reason why price take out our former long-term swing highs. It take it out just to show that this is a long-term swing low. Remember I told you that after a long-term swing low is being formed in the market, remember that there's going to be an opposite high. So that is it. Once we are able to spot our intermittent swing lows and to the left and the right, this is called our long-term swings. So this is called our long-term swings, swing low. We have already seen our market structure shift, which is the TC bullish at this point. This is our long-term trend change. So that is the reason why price take out this our long-term swing highs. So it's very easy. It's very easy to spot it. So that is it, guys. I think this video is getting longer. So let's quickly look at our example. The strategy is very simple. So the way we trade this our long-term swing, like I said in my previous video, I talked about when we are looking for a way to buy on the intermittent swing lows, we have to, after our intermittent swing low has been formed, we look for a way to buy every short-term swings in the market after price has already given us that our intermittent swing low has been formed, similarly to the long-term swing. So when the long-term swing low has been formed, we keep on buying our intermittent swing low after we have confirmed that our swing low is being formed in the market. So now we already confirmed that our long-term swing low is being formed in the market. So what do we do at this approach? We keep on buying from every intermittent swing lows in the market. You understand what I'm saying? So keep on buying. So if, remember, this is our intermittent swing lows. Remember I told you that when we have several short-term swing low left and right, this is our intermittent swing lows. So this intermittent swing low become bullish, which is our bullish continuation pattern. After it formed bullish continuation pattern, what happened? Price retraced into our intermittent swing low. After it retraced, what happened again? We look for another approach. Look at what happened when price became bullish after breaking out, which is after giving us our BC up, continuation of our bullish structure using Larry Williams approach. Price create another intermittent swing lows, but it could not retrace into this leg. Do you see what I'm saying? So if it could not retrace into this leg, know that maybe our intermittent swing lows, which is our intermittent swing highs, know that price is going to create a reversal from the intermittent swing from the high to the low. So it's going to shift this our intermittent swing low. So what happened? Price price take out these intermittent swing lows. Remember, when price take out our intermittent swing low, this becomes our long-term swing highs in the market. Are you getting me? So are you getting what I'm saying? So this is TC bearish. TC bearish. How do we know that this is our long-term swing highs? Remember, I told you there's going to be intermittent swing highs on both sides. Remember, this is a swing high because remember, it does not matter. This is swing low. Remember, price take out these short-term swings over here, and if we zoom, we zoom further, what happened? Price take out our short-term swing. What happened? It creates a series. It's a swing. Take out our swing low here at our intermittent swing. So this is our long-term swing highs from henceforth. So from henceforth, we are going to be looking for our intermittent swing low to sell from. So like the opposite of the bullish scenario. However, we can see our short-term swing highs on both sides, which is our intermittent swing highs. So remember, this is our continuation after our long-term swing highs has been formed in the market. So this is continuation bearish to the downside. Remember, it's our intermittent swing highs in the market. We keep on looking for intermittent swing lows to sell from. So from this place to this point, this is our intermittent swing highs. So people sell at this intermittent swing highs. What happened? Price take out our long-term swing lows in the market. This like what I explained earlier on. If you remember, this after price hits this our long-term swing lows, remember this is now our long-term swing low. But what happened? Price failed to create a movement upward. What happened? It took out our long-term swing lows. So that is just it. So from henceforth, we keep on looking for our intermittent swings to sell from. So that is the reason why most people sell at this point. However, you can say this is a short-term swing lows in the market. However, this is a long-term swing high after it take out our swing our long-term swing low. So it's very you have to pay close attention. The reason why I'm telling you this is that sometimes when price fail to continue from our market structure and price take out our structure below after it creates a move up, like remember that this swings low it took out is not an ordinary low. Since it pulled back to the long-term swing low, this becomes a long-term swing lows. So if it becomes a long-term swing lows, remember this becomes a long-term swing highs. So you understand what I'm saying? Or you can call it intermittent swing high, depends on how you want to call it. But however, according to my approach using Larian's concept, this is a long-term swing high. So from henceforth, price shift bullish at this point, creating our two intermittent swing lows on both sides. From henceforth, however, what do you see upon the price take out our intermittent swing lows? So if you notice that this is our intermittent swing lows, because it become bearish at this point. So at this point in time, what do? You have to wait for another structure to a little bit of price action to show that this is our long-term swing highs has been formed. So if we have a series of short-term swing low and price, let me give you a scenario. If we have a series of short-term swing lows like this and price take out, know that this becomes our long-term swing highs in the market. So you understand what I'm saying. So that is just it, guys. So it's very simple, straight to the point. I didn't expect this video too long, so I just make it more detailed so that you understand how we can spot the long-term swing lows from the beginning to the end. That is the reason why most people don't talk about the long-term swing lows and highs, the long-term swing highs and lows, because it's very difficult to spot the long-term swing highs and lows. But if you want to become a profitable trader using this Larians approach, you can become a profitable trader. So that is it, guys. First, we'll talk about what is long-term swings highs and lows, and we use our Larians approach on how we can get our long-term swing highs and lows by identify our intermittent swing structure on both sides, so give us our long-term swings highs and lows. For example, if you are looking for a swing lows, you have to understand that you have to have intermittent swing lows on both sides to give us our long-term swing low. So similar to the bearish scenario, if you are looking for a long-term swing high in the market, you have to look for two intermittent swing highs on both sides to give us our long-term swing highs in the market. If you notice that we have a long-term swing highs on both sides and price shows that our long-term swing highs is being formed in the market, you have to be looking for a continuation structure to sell from. So you understand what I'm saying? To sell from. Anytime continuation structure on the intermittent swing structure formed, you look for a way to sell on the intermittent swing structure. So it's very simple. So thank you for watching. Now please, if you really enjoyed this video, I want you to like and subscribe to Traders Endgame. So it's going to be more fun to show you how you can be able to become a profitable trader. So that is just it. In my next video, I don't know if it's going to be a bonus. In my next video, I'm going to show you one of the most powerful strategy which you have not come across in the trading industry, and I'll give you a good approach on how you can be able to become a profitable trader using this strategy. So from henceforth, I will see you other time. Happy trading. God bless.